Hello, this is Cameron Murphy from Avalara. I'm a Senior Strategic Alliance Manager, and I'm joined today by Cameron Koonsman, who is a sales executive on our SAGE team. We're going to bring you today Know Your Nexus, Avoid Costly Tax Traps, and Stay Ahead of Compliance Risk webinar. So, quick disclaimer to get out of the way first. Friendly reminder that Avalara cannot provide legal tax advice. Everything we discuss today is for educational purposes only, but we will answer questions as best we can. So our agenda today, we're going to go over Nexus 101, what it is and why it matters. We're going to go into common Nexus pitfalls, customer stories, and case studies. We're going to jump over to how Avalara can help, and then we're going to wrap it up with next steps to stay ahead. Nexus 101. So this slide is all about Nexus, physical Nexus creating activities, and it's a growing list. What is Nexus? Nexus means connection. In this case, a connection between a business or a seller and a taxing entity. If a business meets certain requirements, it needs to register in that given state, remit taxes or collect exemption certificates or both, and file a tax return. Between 1992 and 2018, Nexus was based on physical property. States extended the definition of physical property. Now, 9 states expanded to include purchases made within their state, creating economic nexus. But what is economic nexus? Economic nexus law was taken to the Supreme Court, ruled in favor of South Dakota. Now economic nexus is the standard, along with all other reasons that may establish nexus. So South Dakota versus Wayfair. It really changed the landscape for sales tax with businesses. Before that, you had a ruling against North Dakota, which ruled against the state. This time on June 21st, 2018, the U.S. Supreme Court issued its decision in South Dakota versus Wayfair and ruled in favor of the state. So the court ruled for South Dakota, and physical presence standards set forth in Quill versus North Dakota and National Bellis Hess Incorporated versus Department of Revenue of Illinois. So now new economic nexus laws allow states to impose sales tax obligations on out-of-state sellers based on their level of economic activity in the state. And now all 45 states have their sales tax adopted nexus. So economic nexus thresholds vary by state. They can go based on either revenue generated within the state or transactions. So those two thresholds can vary. You can see here on this map, there's a lot of different states that are having different thresholds. Connecticut's threshold is gross receipts of 100,000 in sales and 200 retail transactions. New York's threshold is 500,000 and 10,000 and 100 transactions. Certain states exclude resale, services, digital, SaaS, and more. So how do you know if you have nexus? There are several types of nexus that may create an obligation for you, the business, to register, then collect and remit sales tax or use tax in a given state. The first one is affiliate nexus. Affiliate nexus laws first emerged in 2008. Under affiliate nexus laws, an out-of-state business establishes a physical connection through in-state affiliates, employees, representatives, or other entities. For there to be affiliate nexus, there needs to be a relationship between the entities, but the nature of the relationship varies a great deal from state to state. Click-through. Under click-through nexus laws, your out-of-state business can establish a physical connection to a state through an agreement to reward a person for directly or indirectly referring potential buyers through links on a website. Economic nexus is based on thresholds, which varies by state, which we just went over, with the most common being 100,000 in sales or 200 transactions. And lastly, physical presence. Physical nexus, as we looked at earlier, is triggered by having employees or physical locations and stock in a state. So how do you keep up with your nexus requirements? To comply, you must know the sales tax laws specific to every state you sell into. And there can be over 13,000 different jurisdictions, including each local jurisdiction. Common pitfalls. So I'm going to turn it over now to my colleague, sales executive on our SAGE team at Avalara, Cameron Koonsman.
Thank you, Cameron. Always a pleasure. So let's take a moment to walk through some of the most common misconceptions we see when it comes to Nexus. So these are the types of misunderstandings that can lead to a serious compliance issues if left unchecked. So first, there's the complete lack of awareness. So some businesses simply don't know what Nexus is or how it affects them, especially as they grow or expand into new states. Then we have what I call partial knowledge. So people may have heard of economic nexus, but they're not aware of all the different triggers like remote employees or inventory and third-party warehouses. So another big one would be the idea that you can just register and file going forward. In reality, if you've had Nexus for a while, you could have historical liabilities, even if you didn't collect tax. So this is where businesses get caught off guard and can get some costly penalties during audits from the states. And then finally, there's a false sense of consistency. So assuming the taxability of your product or service is the same across different states or even in your own as rules change. So in reality, what's taxable in one state may be exempt in another. Even seasoned businesses can make mistakes on this just because the laws are constantly changing. You're trying to hit a moving target. So the key takeaway here is that knowing what to look for and where to look is the first step in protecting your business from costly surprises. All right, and then we have a couple customer stories to highlight here as well. So case one. So this customer was selling cosmetic products through e-commerce platform as well as wholesale since 2005. The company suspected that they needed to be collecting tax in states. However, they did not know which states and if they had delinquencies as a result of Nexus and failed to collect tax. So from a solution perspective, so they came to Avalara. One of the first things we did was we assigned them a risk assessment. In the end, once they completed that, we found out that they had historical nexus in roughly 21 states. This was mainly due to economic nexus. So due to their sales, they had crossed the threshold in a number of different places. Their final liability was around $720,000. And so we painted a couple different options for them. If they were to go through our voluntary disclosure program, which is essentially an amnesty program through the states where you go and Avalara anonymously will help you get registered and file any unpaid liabilities. Their liabilities, if they were to go through this program, would be reduced to roughly half, down to around $370,000. So the recommendations we made were mostly around which states and where they should register, and then other states where they should register in future periods. So the alternative to voluntary disclosure, which was facilitated registration, filing of all the taxes, and then the penalty abatement. So the result was the customer did engage Avalara to provide representation in this voluntary disclosure service. So essentially, Avalara helped them circumnavigate having to pay over $300,000 in liabilities and interest through this amnesty program provided by the states. Second customer case. So this customer has been selling apparel since 2000. They were registered only in California and they were unsure of their nexus. Unfortunately, they simply registered in several states without knowing for sure if they needed to and disregarded potential historical liabilities. So they engaged with us to confirm where they have nexus and any potential back liabilities. So we went through a risk assessment with them. We confirmed where they had nexus and computed their liability. We did confirm that the customer had nexus in roughly 40 states and not registered a majority of them. Unfortunately, they had erroneously registered and disqualified themselves from voluntary disclosure in 24 states, thinking that they would be fine, but they lost out on roughly a $1.6 million liability reduction that they would have gotten through the voluntary disclosure program. In the other 16 states where they were supposed to register, they were able to participate still in the voluntary disclosure program and were successful in obtaining a $1.2 million liability reduction. And then third customer case, this customer sells backpacks. They've been selling backpacks since 2015. They were registered only in California, Vermont, and Washington since 1999. And they wanted to know where they needed to file and if there's any back liability. Similar solution here. We went through a risk assessment. We confirmed where they had nexus and computed their liability. We found that they had nexus not registered in 8 states roughly, and their total liability was around $450,000. However, through voluntary disclosure, we were able to limit that through the programs and reduce that to around $250,000. So roughly $200,000 in savings of back liabilities that were owed. Now, the big takeaway from all of these is that knowledge is power. We're going to be able to help you understand where you might have liabilities and how we can address that. And our team is very strategic when it comes to this and proposing different solutions and working with your company's risk tolerance to make sure that we're accomplishing your goals on time. And now moving forward, we're going to talk a little bit more about how Avalara can help from the technology side as well. Avalara and Sage have a pretty unique relationship. We've had an integration since around 2006 with Sage 100, and now more recently, since around 2012, we've been an OEM partner of Sage's. So we have an integration for almost every Sage solution there is, whether that's integrating for your tax filings, for the calculations, for exemption certificates, pretty much any of those different areas. It's likely that Avalara and Sage have a solution that we can help you with. Primarily, this slide is kind of talking about our tax determination tool. So we'll integrate with your instance of Sage. We'll eliminate the need for you to maintain a manual tax schedule in Sage. We'll make sure that you're tracking your Nexus properly, and then also help you file and maintain exemption certificates. Then going to the next slide, here's a number of different things. So these are just some of the benefits of automating your tax compliance process. So as we mentioned before, this is not a revenue generating activity for any company in the US. This is something that simply needs to be maintained for compliance. So we've chatted about a couple different of the Nexus examples. So a lot of times companies come to us from a perspective of they're not sure what they don't know. So that's oftentimes our first step when we're chatting through potential risk in the business and how we can help mitigate that and give you the opportunity to focus more on revenue driving operations. So really starts with Nexus, making sure you're registered in all the right places, helping you limit any back liability if there is any out there from your previous sales. In turn, product taxability and tax rates are constantly changing. So in the US, there's over 13,000 different jurisdictions. We really help make sure that all of those changes are updated within our system and in your system in tandem to make sure that as these changes happen, they're constantly updated within your process to make sure that you're charging the correct tax in the proper situations based on product taxability and where you're selling into. When it comes to making sure you're selling at the right rates as well, instead of using a generic zip code or something along those lines with your ship to addresses, we'll actually generate a latitude and longitude to make sure that we are going all the way down to the door level and we're charging the correct tax based on the jurisdiction. So in a lot of states, these jurisdictions can run right up next to each other, and there can be special taxing jurisdictions that cross over city, neighborhood lines, county lines, anything that you can think of from that perspective. So it's important to make sure that you're charging the correct tax rate, especially when these jurisdictions can constantly change and add new tax rates or special rules over time. And then exemption certificates, we do have a lot of customers that sell in a tax exempt space. So whether they're a reseller or they're selling to resellers, they're a manufacturer, a distributor, a lot of their liability will actually end up in these certificates. So when during the case of an audit, an auditor might ask, okay, I understand that all of your sales are tax exempt, but I need proof of those by transaction. So a majority of these documents are going to be what your liability could be based off of. So not having these can be extremely costly to businesses, and auditors are getting really tight when it comes to these different regulations surrounding these documents. We help our customers maintain these over time and also help them collect them on the front end. So when they come to Avalara, we have a managed services team that can help get you compliant from the start and then help you stay compliant over time. In turn, once we have all of your information from a taxability perspective, we have all of your different exemption certificates, it often comes down to a filing responsibility as well. So even if you are tax exempt, these states are going to want you to be filing $0 tax returns and also reporting any taxable sales as well. Avalara is happy to help you file these tax returns as well. Like we said, this is not a revenue generating operation. It's really just something you have to do to stay in compliance. So giving companies back a day or so of filings can be extremely helpful in the long run. And then audit readiness. Avalara has a whole team that really just helps customers that are undergoing audit. So they'll help you compile reports, help you kind of pull different documentation when the auditors are asking for it. And in turn, we also do notice management. So if a state reaches out to you with questions on anything from a returns perspective or just a specific question about your operations when it comes to sales tax, you can lean on Avalara's team to help you manage those notices and essentially be your intermediary for the state. And then we talked about the voluntary disclosure services as well. So to give you a little bit more color on this, this is essentially an amnesty program offered by states. Some states have different rules and look back periods. So if you were to get reached out to by a state that you're not registered in and be going through an audit, A lot of times these states are able to look back as long as you've been operating in their jurisdiction. So for example, if you were working in Pennsylvania and you were selling into Pennsylvania from out of state, they actually don't have any limitations to their look back period. So they can look back as far as they want, as far as your first invoice within that state, to make sure that you're charging the correct tax in the correct situations. So with that in mind, it can really add up liability over this time period. So what the voluntary disclosure program offers is essentially a limited liability look back. So when you come to the state through Avalara and we help you get registered there and go through this voluntary disclosure process, Avalara is going to go anonymously to the state, say we have a customer that's ready to get compliant, and we'll limit the look back from potentially 20 plus years to down to 3 to 5 years. So it really limits the amount of liability while also getting your interest and any penalties potentially waived on that as well. So we talked about how customers limit their liability. This is one of the best avenues to do so. And then registering to collect and collect sales and use tax. So this is another conversation that we have with current customers and prospective customers all the time. So the nice part is if you're using an Avalara solution, if we're handling your tax determination and really integrated with your instance of Sage, we'll be able to track your Nexus. So as you continue to expand your business and move into new states, we'll basically give you a notification, say, hey, you're at around 80% of that Nexus threshold. It's time to go ahead and get registered. Would you rather Avalara do it for you, or would you rather do it on your own? It's always the customer's discretion, but it's great for them to have an additional layer of support there. If they don't want to register, then we charge a flat fee for it, get them registered and put the credential in the system for them. Otherwise, our customers are more than welcome to go out and register on their own and then just have the system handle that on the go forward basis as well. Similar things we've talked about already. When it comes to filing, this is something that can be very time consuming, especially if you have a lot of different information that you need to aggregate. The great part about this is that we will capture a majority of your accounts receivable. And then when it's time for the actual remitting of the taxes you've collected, our team will have you just hit approve on our returns to make sure all the information is correct. Then we'll prepare those and then we will file them for you before the end of your filing period. So making sure that you're always hitting these on time, not subjecting yourself to any potential liability or late fees when it comes to that. And then also notice management, like I mentioned, if the state does reach out with any questions, Avalara will be your intermediary and help manage that conversation. And then next steps to stay ahead. So one of the great parts about Avalara being partnered with Sage for this long is that we have special incentives and programs for our Sage customers. Folks that aren't using Sage oftentimes will pay up to $4,500 or $5,000 for one of our risk assessments. That being said, we're able to offer that for free to Sage customers through the end of 2025. So if there are any potential states out there that you're not sure, or you just want to do a temperature check on your current Nexus, we're more than happy to help get you signed up and make sure that you're registered in all the right places. And if there is any potential back liability or other things that we need to address from a risk perspective, we can talk through that with one of our internal tax directors. A majority of them are former auditors and Big Four accountants, so they have a ton of great experience and can help you understand what these auditors are looking for and what you might need to do to get compliant. And then lastly, if you have any questions about Avalara solutions or any of our special promotions, please feel free to either reach out to your Sage business partner or Sage directly, and they'll get you connected with one of us at Avalara. We have a great team. There are several of us that are tenured and work specifically with Sage customers. So as these questions arise when it comes to compliance, if you're curious or you're not sure where you might need to register, feel free to reach out to Sage or your specific partner, and we're happy to help coordinate that conversation and make sure that we'll get you compliant and started on